watching this signal for the end of the bull run. I'm going to go through a few reasons why and how to identify this for the end of the bull run. Do I think the bull run has ended now? No, we don't have confirmation of that. However, I think it's important to discuss these signals, especially on down days. This is where most people are interested in the market going down. Most of the bearish narratives come out around this time, and more often than not, the search volume for should I sell crypto is out at these times. We saw Bitcoin down now roughly 13% from the all-time high price, and in the last 24 hours, we saw Bitcoin drop nearly 4% from that price of 113,500 down to 108, very close to the lows. So in this video, I'm going to go through this title, what I'm watching for as a signal to the end of the bull run. I'll give you examples of how I've used this signal previously and talked about it at the time, in real time on the channel. If you've been following now for years, one of the important times that we did this on the channel was back in May of 2021. So quite a few signals have shown up at the moment that have suggested a slowdown in the trend, meaning a slowdown in the move to the upside. We've covered those several times now, looking in particular at the weekly chart. So we had the 3 red weeks to the downside, and we also had the 3 down weeks. So the weeks that were lower highs and lower lows. When we use the indicator here and turn on the red down weeks. So that are these ones here, 1, 2, 3. That is a lower high, and it marginally got into a lower low by about $100. So those two signals alone said that the movement to the upside is slowing down. Now, we've seen similar signals before, especially at these highs. Now, I'm on a weekly chart here. I'm going to drop it back down to a daily chart. 2 of those in particular for this cycle was at the March high and the December high. Those times we had 1, 2, 3. That's telling us bears are in control, but bulls are going to be louder as we see these rallies back up to test the prior tops. Bulls were definitely louder at these two, and sometimes we can see that come up in the fear and greed index. So essentially the sentiment. We're looking at sentiment now, and then I'll bring in the long and the short-term mindset that you have to have as a trader so that you don't get caught out in the markets. So here is March, all in extreme greed. You're still in extreme greed by the 27th, so keep that in mind. And then we look at where the 27th is on the price chart, and that comes in at these highs. So you've got a lower high forming. So that is to me, is a very strong signal that it's likely going to see further downside. All the sentiment is there, but the price isn't pushing up. And I'll also show you this in real time with Ethereum at these highs that we just talked about, so that we can prepare for what's happening now. And then obviously I'll go through some of the analysis for the current environment. But it's important to understand how this comes about. Otherwise, it's just look at price here, it's going to go up or down without actually understanding how it works. It's like not understanding how you've put your gym plan together for your diet or your exercise to lose the weight or put the muscle on or to get more flexible, more mobile. That's the sort of thing here. Okay. So the previous example in the price cycle, April into May, had 3 bars down. It broke swing lows, so basically showing a lot of weakness, and then it tried to rally into a new high. At the time, the sentiment was crazy. It didn't actually get into that extreme greed, but it started to rally up. And social media was very, very bullish at the time. If you're in the market then, you may recall it, but this was very similar to what happened in January of this year, 2025, when Trump was inaugurated. There was so many calls for bigger prices because we have the crypto president in power now. And of course, that called the then all-time high price before the markets collapsed. The same thing happened here. May 2021, it was off the charts. Everyone going bananas with how much Bitcoin had to go up. And then, of course, it collapsed. So those signals that I'm pointing out here say bears are in control, but the bulls are still louder. So there's 2 different things there going on. Technically, bears are in control, and I guess fundamentally looking at the sentiment, bulls are still very, very loud. Now, the other thing here that we haven't pointed out yet on the channel that looks similar to what's happening right now is the price ranges. So look at these price ranges to the upside. Look at this cycle. It's a pretty good move to the next high price, and then they start to slow down. You're not seeing as bigger moves into new all-time high prices. And then you get the bears taking control technically, the bulls taking control sentimentally, and then everything comes crashing down. The bears take control again there. So this is the big one that I'm watching out for next. Doesn't mean it's going to happen. Hopefully we don't get there, but I've got several other pieces to cover here. Now, I'm not turning bearish or anything like that. I know it can be a little bit confusing, especially for new traders, and you typically read that in some of the comments. They're sort of unsure, do I go in now or not? That's not the point. The point is to watch for these signals play out. And at the moment, we've got this move to the downside. We've talked about this on the weekly chart. We've got a bit of weakness here, and the market's pushing lower. I'll get to the bullish stuff in a moment, but I think it's just important just to cover this as pertains to what's happening right now. So at the moment, we've got this move down, and we take a look at this chart here. We can see that the prices to the downside, the movements to the upside, those highs to the next highs, how much price range there is there, have been getting a little smaller here. You got roughly 47%, about $35,000, and then from this high to the current highs, you've got only $14,000, $15,000 with about a 14% move. Now, it doesn't mean that that's the only thing that we're looking for and it's basically over from that point. Maybe we see the market come down and then rally into a lower high, but that's definitely something that I am looking out for here in case we do see a test to these lower prices and a breakdown of that 100 to below 100, somewhere down to the 80s or even 70s or 80s there. Forget that number for now. We're just looking for attempted tests of the 107 and the roughly 100 level. If we start to see this thing rally up on extreme sentiment, like we have done in the past, like I pointed out here in March where we got to this lower high top, sentiment's going wild, but the price isn't keeping up, that would suggest that the bears are in control technically and that the bulls are going to be louder at that time. If the bulls are going to win at that point, they have to get the price above the previous tops and hold it above those tops. That's when we know that the bulls are in control and we should see much, much higher prices. So it's still a little bit early. That's a longer term view. And I mentioned the longer term view because we've been covering the longer term view here with this signal of the bearish move to the downside, the rally that we've talked about after you see this bearish move somewhere in the vicinity of 6 to 13%. It came right dead in the middle there at 10%. And then we saw the pullback so far. And the point from this pullback is that it would likely come back to test the lows here, if not slightly break them, like we have seen it happen so many times before. 3 red weeks, little rally up, comes back and tests the lows. 3 red weeks, not the red on the top here, but the 3 red weeks. There's the rally up and a test of the lows, so on and so forth. You can go back and test these for yourself. It happens so often in the markets. That's a look at the weekly chart. Now let's drop it back down onto the daily chart and have a look at where things are at currently. And this is where the slightly bullish sentiment comes into it and the bullish news here as well. Obviously, we saw roughly 4% to the downside. We saw breaks of the 50% level. The double top that I was watching, this is the lines that I'm moving around here on the chart. Those came in at 117,000 for a round number. They also got rejected at the 7-year resistance line. So that's that white line across the top. You've seen me cover before, connected to 2017, 2021, and has now been rejected twice. So pretty significant area for the bulls to reclaim if we're going to see some sort of low form between here and somewhere around the $100,000 level being the previous low, and some of these extensions, which I'll talk about in just a sec. So if we do see a low somewhere in here, for reasons I'll give in a moment, then we want to see this bounce, reclaim 118, the sentiment not get out of control in that extreme greed, and just remain neutral, maybe greedy, that sort of thing, which is still a possibility because of the current fear environment, which has dropped into fear and is just so marginally close to hitting extreme fear. So if that sentiment has reset and price finds a low and starts to climb higher, ideally this movement also is quiet in its rebuilding. Essentially, it's buyers buying up in a much quieter environment. And that has also played out with the sentiment. We've looked at Google search words, Google trend words where you've got crypto and Bitcoin. They've been at very, very low levels of late. And if this is going to be some sort of low in this vicinity, 100 to 110, and we start to see this being bought back up, I think there is a possibility that it's going to be at a quiet time, and hopefully for the bulls, it does reclaim 118. And then as it breaks out, that's when the market sentiment picks up and all that sort of search volume. Now, if you see it in the opposite, as I've mentioned, you see greed picking up too quickly, you see sentiment picking up too quickly, and the price isn't able to overcome these levels at 118 and 120, and of course the highs there at 124, then that's going to be a warning sign in itself. So you could see this, and it start to rally, slow down. Everyone's going to say, you're wrong, the bull market's still on, yada, yada, and then it sort of pauses out and then catches them by surprise, which would then mean you've got this August top in, which has never happened before. So this is my next little bit of rant about the market, and something that we haven't seen before for Bitcoin, on top of what I've seen that everyone is watching right now. Let's cover what everyone is watching right now, and that'll give you an understanding of what we haven't seen before. Everyone, I think, is watching right now, including myself, is Q3 to be relatively quiet. This chart shows it pretty well, I think. This is our forecasting cycle, so our predictive cycles here. This is Q3. You can see July through to September. That's this part right here. And that wasn't really going to show much action. You can see it on monthly forward returns for Bitcoin. You've got maybe a green month and a red month and a slightly green or slightly red month like September. And then for Q4, the idea is that things go absolutely bananas to the upside. So while I still hold that view, what happens if these things don't occur and it's almost like the opposite of what everyone else is watching? So this is where the analysis versus trading comes in. And Michael did a fantastic video on that today. Analysis and trading are very different. What we're talking about here is analysis. Trading is actually taking the action. Again, I go back to the gym and exercise analogies, whereby you could talk all day long about what the best foods are to eat, but unless you actually put it into practice, you'll never know. So it's like between a plant-based diet and a meat diet. One you could say is better for the environment or whatever the argument is, but unless you put it into practice, you'll never know if it works for you or not. So that's a trading versus analysis sort of thing. It's basically like your science versus the art, putting it into practice. So what would this look like on the chart of Bitcoin? Well, firstly, it would have to show a breakdown of key technical support for the bull market structure. That would be, I think, at least a breakdown of 98,000 with some closes below that, like we saw in the example that I gave for April and May of 2021. There was a breakdown of a key swing low that was a longer term time frame there on the weekly chart, and you had multiple closes and then that rally. Now, more important, well, kind of on a similar par with the importance of the signal is this attempted rally. The attempted rally would need to be of an extreme greed nature, not necessarily only on the market sentiment fear and greed index, but what we're watching across YouTube, across X, any other social media platforms, maybe even in the retail space with mainstream media, traditional media, where we would see a lot of interest come back in for this rally. And what would have to happen with that renewed interest is a lower high to form on the price chart. So that would be one of the major signals that I'm watching for the end of the bull run. As I have said many times before, hopefully it doesn't get confused. I don't think that's the case at the moment, but there's obviously a difference between analysis and trading. If we see that come up, then you've got to take action. And I know it can be seen, and it's usually the case, people think you're talking out of both sides of your mouth and all sorts. But at the end of the day, I want to make money from the market. I don't care what those others say. And I think some of the legends have some great ways of putting this. In this business, if you're good, you'll write 6 times out of 10. You could even be right 3 times out of 10 if you get big enough multiples, like we've seen with things like Bitcoin doing 7x this cycle, right? You're never going to be right 9 times out of 10. That's for the analysis, which is why the trading part of things is so important. If you don't understand what the difference is between trading and analysis, I encourage you to go and watch Michael's video. It's called It's Almost Time. I've left a link to Michael's channel in my video description. Of course, that's my brother. We have the same surname. And the next quote here: in trading investing, it's not about how much you make, but rather how much you don't lose. Everyone thinks it's about how much you're going to make with these 7x's, 10x's, 5x's. Yeah, you can make those x's, but you can most definitely lose all of it as well, if not, the majority of it. We've seen that over and over again this cycle with the likes of some of those ex-influencers making tens of millions of dollars and then basically losing it all in their leverage trading. The liquidations getting absolutely wiped out here. Longs getting liquidated yet again, another $1.1 billion total for the day. 1.2 billion liquidated, and just a few days ago we saw the biggest liquidations in history at $1.8 billion. That, coupled with the market sentiment that we had looked at here, we're seeing the sentiment drop. It's in fear, to the low end of the fear at the moment, almost at extreme fear. Sometimes shows that you're getting close to a low, and as I said before, Michael has some good information on that in his video today. The exchange volume is still holding up. It's a small, tight range at the moment, still in the $50 billion, but it hasn't dropped back down to levels that we saw 12 months ago in the high 20s and low 30s. So that's a positive as well. And leading into this peak of the real estate cycle, I still think there is further to go for the US stock markets. But as we've covered several times before, there isn't seeming like there's that much time left for this peak to come in for the US real estate and economy, as we'll continue to follow up on the channel here. Now, a few of these have come to fruition. The one I'm looking at today is Bitcoin will hit at least 122,000 in 2025, and I've said possibly 144, if we're to get this move higher. Now, the 122 has been hit, and we saw an all-time high of 124. I'm pretty happy with that at the moment for that target, and ideally we see this extend and it goes beyond that possible target there of 144. The other thing we would see is the USDT dominance continue to rise and break out of the 5% level. So this has been a very key level that we've been watching for a change in trend. If this keeps rising, bears are in control for the crypto market. If it keeps falling, USDT dominance, then the bulls are in control. So if this rises and then comes back, well, you've got the bulls in control on the way down, but you're putting in a higher low, which is actually a lower high for Bitcoin and cryptocurrencies. Therefore, it is weak. So if we saw this particular pattern play out, it breaks the resistance. Therefore, it's in the bullish structure now. And these pullbacks, that would be another area. If this all lines up with the Bitcoin analysis, that could be a good area for more profit taking as well, rather than hoping that the market's going to go higher. So in the last 24 hours, we did see USDT dominance break out of this trend channel that we're watching. There is your 50% at about 4.8%. And from there, we got to hope that the market doesn't go higher. But of course, hope is futile. We just keep following the charts to let us know what the market is doing. As we've done with this chart here from Crowded Market Report, the red is the commercials getting extremely short on Ethereum. We've talked about this many, many times before. And the blues were the large speculators. Large speculators, I think, covers things like these sort of funds here with Arthur Hayes, who basically sold at 3,500 for ETH, then bought back in near the peak at 4,300. So you can see there it was trading, sold that, bought back in at the top. Now, of course, the market is down. You can see all of the notes there from here. Meanwhile, while he's buying at the top from the data here, from the date, August, right, then comes out and says why Ethereum can go to 20 grand. And remember, we heard all about those other highs with Ethereum going to 30 grand, 60 grand, whatever tens of thousands of dollars they've been talking about. Here are all the reasons why they have to. One of the main reasons was that, well, institutions keep buying Ethereum, therefore it has to go up. The positioning is not showing that. Neither did the time or the price analysis that we were covering on the channel show that it had to go up from that point, especially when they're all talking about it at the highs. Ethereum Bitcoin has continued to fall as we've expected, so we're watching for any sort of support coming in around 3 to 3.3%, ETH versus BTC. Should we also see a rally up here, we need to see it break the highs again. Otherwise, that could be the top for the cycle. Not there yet, still got time. And of course, the ETH USD chart here has broken down in the last 24 hours below 4,000 and is verging on a nice correction of 23%. So I've been watching the 20 to 30%. It's hit that now. I think between 20 and 30, we could go somewhere into this zone here. So roughly 33 to where it is around $3,800. So it's hit that now. Do we see a rebound? Ideally for the bulls, it does get back above $4,100. That's where the breakdown stemmed from, and that could put it back into a stronger position. Your other altcoins at the moment are struggling, all under 50% for some of the majors here, and they've also put in lower highs on the way down, lower lows. Below 50% is Sui, Solana, bouncing ideally here. Let's clear off a few of the things here. Above 195, and it really needs to get back above at least 210, ideally 217 for these tops. That would then put it back into a slightly more bullish position, and then we follow from there, whether it's going to break through any of the 50% or the previous highs. You can see 222 is a pretty decent number there for it to get back above at the moment. XRP, funnily enough, again, it's still struggling after the 12 months that I've been looking at, right? The time frames, low to high 12 months. It's crazy how these things keep happening again. Now, it hasn't been confirmed yet, so I could be proven absolutely wrong. The extreme we're looking at is roughly around December for XRP. But if it does break that 260, it's looking much weaker for it to attempt a new all-time high. And that could be the top there at 366. No confirmation yet, so hang on, XRP army. But yeah, if you're watching this and you don't want to be round tripping XRP for the next 10 years, like the guys here have done for the next 10 years or whatever, then watch those key areas. Roughly 260, and then any sort of breakdowns below $2 would be pretty critical levels there for XRP. And finally, on the traditional finance, we did see another day down here for the S&P 500. So 2 days down at the moment. Keep that in mind as we lead into Friday, the final day of the trading week. And this is part of the 5-year pattern that we've been tracking now on the channel for many, many months. If this is looking weaker through this period, then I think it's going to be a little bit tricky for Bitcoin and cryptos to also show signs of strength. Ideally, they just track sideways through the next period, like October, if it does in fact track sideways, and then we can start this journey higher, like we've looked at before, with the XRP, with the Bitcoin predictive cycles for that end part of the year. You can see the blue lines, the red lines, they're all your bull market years, and the green years being all the years as well. That period has shown many times that October could be that good time that we see the markets turn around, even if it is later in the month. Remember, this is the red line, there is October, takes some time, and then it could start towards that later part of the month. Big video today, obviously, with Bitcoin dropping. Make sure you hit the like button, subscribe, and share it with a friend if you have found value from the content. Links in the video description for our free reports and TIA Premium. So the idea is to not lose as much money. Make the money and then try not to lose that money. All right, guys, I'll see you guys back here at the next video. Thanks again. Until then, take care and peace out.